Audio, testing audio, testing audio, testing audio. Can you hear that now? We hear the sound now. Yes, okay, perfect. Thanks so much for letting me know. Dave, can you hear now as well? Every once in a while, I have to click on the microphone, like double click it, and I usually do that. Okay, awesome, thank you. Sorry about that. Let me just rewind here. I was talking about this current trend. The rally that we've had is pulling that long-term trend higher. We're still at the extreme. Historically, this I need to update this because for years and years the upper end of this range was 5, and in the last probably 4 or 5 years that range has been all the way up into the 15s and 20s on the upside, and same with the downside, negative 20. So the market volatility is definitely creating a little bit of changes here in the last few years. That's okay though. What I was talking about on this chart is focusing on, when I spend the most time on it, it's going to be around the edges, market tops, market bottoms. And so we're at some kind of a market top, or at least we're in a trend top right here. And we've got typically what we see though is in a traditional market top, we typically see the price pattern, the momentum spike up above the sentiment, something like this. So when we start to see some of those things, then we are closer to a significant type top. When it's right here and things are kind of spread out, we'll probably get a retracement back down, but not an overall market top. It's just too strong of a rally right here. But stranger things have happened, right? But our momentum is moving higher. We're towards the upper end of that range, but not quite extreme quite yet. Breadth is also solid, and sentiment is also solid. So really the only extreme indicator, even as intense as this move has been, is the momentum indicator. That's going to link and tie into our sentiment indicator here as well. And typically, you know, if it could bump up above that 85 range, what are we at? 81. You can see right here was 80. This range here was 91. This high right here was 86. Let's see what this high was right here. This high was 84. So another decent rally right here, another leg higher, and we could see some indications of some shorter term move. Getting a little bit of a pause right here, but not by much. This is actually nice. It's moving back into that buy zone. So we're getting, you know, we'll get a day or 2 or 3 of kind of consolidation, and then a pop up, and then maybe a day or 2 or 3. And that's really when we get up to this extreme range, we want to see a day or 2 or 3 pulling back the price activity back inside of this buy zone. It just creates more sustainability in an uptrend. So once it's up here, obviously the probability of it going much higher, or maybe it'll go a day higher and then it reverses. So we want to see it pulling back, and it's just right on that edge. That green range tops out at 140. You can see it's at 142, so between 70 and 140. And so, you know, market conditions still look really healthy right here. Just, you know, even if we get these consolidation days, if they just pause through this, or they're slow through it and not have massive selling back down and immediately reverse, but we're in this upper range. Let's go to the 2-year time frame on S&P 500. That 2-year time frame, you can see it's still connecting as a downtrend. It's connecting this high and this low, and we're working back up this other direction. At some point it's going to flip, but it's got to get, this high has got to be significantly higher at this point. It's okay, and it's still fine, but that 2-year perspective now is we're working towards that upper range and attempting to find potentially new highs. Let me just grab this range here, and we've got the 236. So here's our 236 momentum zone. We're still connected to this high. We're still connected to the October low. So this was the low of last year. In October, we retraced back into around that 50% range, and now we're up above that momentum line and continuing the overall range. So what we're running into now again is just as extreme, but it's pulling back. relatively nicely. I wouldn't be surprised to see things have a little bit of volatility here in terms of just a retracement or a little bit of a pullback here. Question typed in here: are these indicators real time or do they update after the market close? Everything, the vast majority of the data is updated end of day. It's updated after the market closes. And the reason why it's designed to do that, some people get frustrated with that, but the reason why it's designed to do that is because we want to base the exact data and signal at the end of the day, at the close going into the next day. That does two things for us. Number one, it slows down our analysis. I can't tell you how many times real-time data screws over people's trades, because if you can look at a chart and it tick, 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 and it's moving, and you're 9 times out of 10, you're going to make a bad decision because the data is not closed out. You might get a rally during the day of it moving higher, and then by the end of the day, it's moved back down again. And so the closing bar, the closing data, and is not, it's not really the data that we want, because maybe intraday we thought it was doing this, and at the end of the day it ended up doing this. So the intraday moves, in my opinion, for this methodology are not helpful. For a different methodology, they may be helpful, but in terms of intraday swing, intraday action, it's just it's not beneficial. So you'll also notice there's no time frames on it. The only time frames are still daily bars, but it's 6 month, 1 year, 2 year, 3 months. You can't look at a 5-minute chart on this system. You can't look at a weekly chart on the system. Why? Because it's not part of the system. It's not going to help you, because what ends up happening is people start to system jump and say, I wonder what it looks like on the weekly. I wonder what it looks like on the 5-minute chart. Oh, yep, there. And then you start getting what's called confirmation bias. You make a decision and you look for every possible data point that justifies or rationalizes your decision. It may or may not be the original decision you made, but now if you're having losses and you're like, oh, I need to find a way to justify the decision that I've just made. And that's what a lot of traders do if they have access to intraday data. I'm not saying that it's bad, or in fact, in many cases, it's preferred if depending on the strategy that you're utilizing. So in most cases, it's end of day. Let's see. Is there a time at night when you can safe review? Yes. So the exact time that it updates is, let's see, I'm mountain time, so that's 4 o'clock. So it's typically at 6:20 Eastern Standard Time. It'll be updated. Everything will be updated. If you went 6:30 Eastern Standard Time in the evening, 6:30 p.m., you're going to be fully updated, and everything will be updated all the way until obviously the market open and into the next day. So typicly emails go out after that. I send out the nightly email, goes out at 7 p.m. Eastern Standard Time. So all of the picks and data and analysis and everything is updated. This is an end of day system. It's designed for that reason, so that we can analyze the trade. And again, it does several things. It allows us to slow down the decision making and make a decision when the market is closed. Obviously, we can go in and then make the trade when the market is open, but we want to make the analysis when the market is closed, so that we can go in and we can set up a trade at the time the market is open, or pre-market, or after the market is closed. Hopefully that's helped. So yes, so all of the data here is looking at yesterday. We do have on some of the data, like the current bar, like this current bar right here, it's 15-minute delayed for the current day, just so you can kind of see what's happening today. Obviously that is important, but the actual all of the scans, all of the watch lists, everything that's going to be updated at the end of the market close. Good question. Great question. Let's jump back to, so again, the process. Let's go back to two things. I want to look at indexes, market indexes. We've got everything bullish. We've got volatility down. We want to see volatility down like this in a bull market. It's going to look like this. It's going to be bearish because it's measuring implied volatility of put options, and there's just no put options being bought right here. So that's good and bad. It's good in that there's no fear in the market, but at some point there needs to be fear. Everybody's on the bullish side of things, and then we need to flip-flop that, but we're not there yet. So we've got bonds moving higher as well. Okay, bonds are attempting to break through this next level, that $90 range. And that's also, you can see it's been choppy, but we're starting to trend higher in bonds. That means interest rates are coming back down, and that's what we want to see for equities as a whole. We also have NASDAQ. We also have Russell 2000. Russell 2000 had taken a little while, but it's now gapped higher and moving higher, moving nicely. It's moving back up. It's into this corrective phase where when we're in a downtrend and we're looking for a possible counter trend and some resistance. You can see that 50% line created a little resistance, but we want to see that 175 hold. If it can hold and we move up to that next move, it's just gradually. It's why it's called a stair step, and you can activate that tool here. You move up to that next level, that next stair step. Watch for it to hold. And in a lot of cases, depending on the strategy, if it's pulling back and it's still in the buy zone, this can still be a buy location. If you know, we talk about a confirmation bar where it finds support and then we get confirmation higher. But in some cases, if you want to try and get in a little bit earlier, you can buy in right at those support areas. As you get support, maybe set a stop loss down below that next level. That's Russell 2000. So moving higher, which is also bullish. We want to see those small cap stocks improving. They typically be the riskiest. They typically are the riskiest stocks, and if they, they usually lead bull markets, because particularly if it's a risk on and you're seeing a lot of just everybody piling in. But they've been lagging here a little bit, so there's still just not a lot of interest in these kind of stocks. There's more interest in tech stocks like the NASDAQ. Triple Qs have been leading. If we look at that 1 year time frame, pretty nice rally here on that 1 year time frame. And then also sectors. If we look at sector scan, we've got the update here. Energy is the last one lagging. Healthcare is the last one lagging here as well. We'll see what they do. But this month, November, has been nice across the board, 10, 11% for each of those sectors moving higher. So let's talk about a couple things in using the extremes for entry or exit opportunities. So for example, we're looking at, let's use oil as an example today, because oil had been this upper range. So I'm on the muscle or the market trend tab. I'm on the sentiment area and looking at this location right here. And this is based on USO, or the ETF for oil. So we're at this area of a bottom. Okay, we're at an extreme. Now we've had some confirmation here off of this move, but we can apply that and do two things. Number one, we can say, okay, we know that oil is at the lower end of the range. Well, let's go back to sectors and let's pull in the commodities and let's look at USO, because if USO is what we're basing this on, then when we're at the bottom of one of those extremes, you can see that this was the first one, this was the second one. We're getting some divergence now on those price patterns, where price is making a new low and that indicator is making a higher low, and it's bouncing here aggressively. So one of the things that we could do, maybe not today is a great day to do it, but when it's reaching those lower ranges and we're at an area where we're looking at a retracement. So we've got a retracement, we've got a 618 support area or a 50%. In this case, it was a 618, and we're looking for a bounce, right? We're looking for a bounce. We want to try and get in as early as we possibly can. Then we can use this sentiment indicator. Where am I? Here we are. Sentiment indicator on oil, and say I'm right here at the bottom. It's at 11. Typically when it gets down to that 10 range or lower, it's not going to go much lower without a rally. So we can have a certain level of confidence in that kind of a trade. I suggest going in with a smaller position size and a really wide stop loss, so that you can allow for some volatility and maybe a potential new low to happen before we get that rally. So for example, if we were to get a reading, this was on the 16th, and let's talk about that end of day strategy. It's on the 16th, and we are at 11. Okay, and we go to the 16th and we look at USO, and it's probably that day right there. It is. Okay, I'm going to go to the 6-month time frame. So this day right here is the 16th on USO. We're getting a new low on the sentiment indicator. It's at an extreme, and you can see the track record on that is pretty clean in terms of the ranges. Okay, it's when it gets to these edges, when it gets to these extremes, it typically doesn't last there for very long, and it creates a higher probability reversal opportunity, especially when it's really extreme like these. So, and we can also look at the chart and we can say, well, I know two things. I know that it's in an uptrend still based on where the snap tool is connecting, and I also know that inside of this buy zone is a high probability reversal if it's still in an uptrend. Okay, this 50% 618 zone or range creates a real high probability reversal if it's still in an uptrend. And we have a 3-part counter trend. There's 1, 2, 3. This is also called an ABC pattern. And so we're getting this pattern: uptrend, counter trend, support. This typically is what happens from here if it is going to bounce. Okay, so it's a little bit more of a speculative trade. But, so there's times where that just can really pay off. Now we could set a stop loss wherever we wanted to, honestly, but we could add in one more. If we're going to try and nab that thing right off the 618, we could set a 786 retracement all the way down here and say, okay, I'm going to buy USO based on this low point here. And then the very next day it gaps higher. So the very next day you can even have some confirmation saying, when it gaps higher, right at the open is going to be my buy for USO in oil because it's in that buy zone, 618. I can set a stop loss here, maybe with a smaller position size. And that's one of the ways to utilize ETFs around different commodities. So instead of me having to buy an oil futures contract, I can buy USO and I can play the extremes. I can be looking for the bounce instead of waiting for the confirmation. They're two different strategies. One is not necessarily better than the other, but one is a little bit more aggressive than the other in to try to buy into this range. But you've got a high probability as long as your risk is maintained. And what I say by buying smaller position and having a wider stop, it allows you to, and this is just risk management. You could do it however you want to, but if I said, I normally want, let's say 2% of my overall portfolio at risk at any time, maybe I decide I'm going to go 1% or even a 0.5%, and I buy half a position instead of buying, $2,000 or $3,000 worth. I buy 1,000. I just buy a smaller position and then watch for that bounce. So looking for signals or looking for indicators to say, where are we at? Or are we overbought? Are we oversold? Is there an opportunity to try and to jump in at this extreme? That's one of the ways to do it, is look for, and it's typically market based. So meaning I'm going to use S&P 500, I'm going to use the Qs, because here I could go back and I could say NASDAQ, same story right here. The NASDAQ hit 10 at this low point right here. So I could jump in, I could go back to Qs, and let's look at that date. That date, the date right here was on, it got down to 10 on, oh, that moved me back to S&P. Let me go back to NASDAQ. Right here was 10.2 on October the 26th. So if I go to NASDAQ on October the 26th, it's this day almost to the penny. Okay, so right here. So there's my extreme to the downside. It's at a low point. Can it go lower? Yes, but not. It's let's say that I looked for that and I got in on this next day. Could it slide another day or two? Yes, but it's so extreme that it's going to get some kind of a pop there. And so you can anticipate that and look for opportunities to be able to do that. So anytime you're going in and you're looking for, okay, we're really oversold, how do I want to try and play this? Do I want to wait for confirmation as it's moving higher, or do I want to try and get something off the bottom right here, I can remove this so that visually I'm not getting mixed signals, because they're two different ideas or two different methods, but I could focus on here's an extreme. So let's see if there's anything that's in there currently, really across the board. Volatility, not, it's not extreme. I would want to see it like this. I'd want to see them really extreme. So let's look at S&P. Same to the upside. If we're up in that upper range, on shorting or going bearish, it depends on the trend, but that can also be utilized. I would prefer to go with the trend, an extreme oversold in an uptrend, or an extreme overbought in a downtrend. Okay, so if we're in a bearish market and we had a big, we're moving lower like this, we have a big rally, and then we get an extreme, something like these, here, then I could look for something to continue that overall downtrend. But now we've reversed trends, okay, and we know that because we have buy-sell ratio, which is in an uptrend and not super extreme. And we were already in an overall bull market with direction alerts. So a couple of ideas for you to utilize there. I'm going to, let's see, let me come back here. So there's other things that you can do. Every one of these, everything that's listed here, copper, corn, wheat, coffee, every one of these are based on an ETF. So let's say silver, for example. Let's say, what was the one? Sugar. I think it was sugar. Sugar had a big rally. Yeah, I don't think I have these listed. I'm adding the ETF in here soon as well, so we can click on that and go directly to the chart. But sure, let's use one that I know is in there, and that is, well, in fact, let's go to the sector ETF. So commodities, we can look at silver. So here's SLV. If I were to go back to this page and I were to say, let's look at commodities and let's look at silver. Where are we at? Silver is reaching an upper extreme. It's reaching an upper range. Let's see what that looks like on the chart itself. If I go back to here in commodities and go to silver, you can see it's had a nice rally. It's been an uptrend. It's extreme, but not overly extreme. Again, it's an uptrend. Well, in this case, it's a downtrend because it's connecting here. So something like that, I could look to say, well, are we in an uptrend or a downtrend? Is there an opportunity to go this direction? In that case, I would need to use an inverted ETF, which is going to be outside the scope of really what I wanted to talk about today. More about the extremes and looking for trading around your core stock picks. So if I'm trading my traditional stock picks and I've got my scan and I'm adding individual stocks to my portfolio based on my scan, but I want to have a little bit more trading, a little higher octane trading methodology, and trading a little bit more actively in terms of buying and selling and buying and selling. This works great for that, to say, okay, S&P 500 or NASDAQ or volatility or bonds or anything, where are we at in that trend? Okay, so S&P, we know that we're in this upper end of the range. It needs some consolidation and maybe some opportunity. Same with gold, same with oil. You can use those as well. There's oil. Oil's looking to bounce. Gold has, had a really aggressive bounce off of these lows, but if you're looking at gold and saying, good grief, this thing was down to zero, it's as low as it can possibly go, how long is that going to stay there, right? It's just not going to last very long. So check these daily and see if there's any major markets that are either extremely overbought or extremely oversold, and there could be opportunities for some trades on that. Let's jump over to some current holdings. So in that muscle stocks group, remember, one of the things that you can focus on is that retracement extreme range. Interesting that AOII, this has been a high flyer now just for the last few weeks, up 100% off of this 50% retracement. This had a really nice run all year, and then in the summer during the market correction, it retraced significantly. Now during the market uptrend, it's starting to rally. So you can see what's interesting about these muscle stock, highly ranked stocks, is they're going to be volatile. There's no question about that. But we think about where that buy-sell ratio was. When that buy-sell ratio went from positive to negative, it was right around here. Okay, when the buy-sell ratio went back to positive, it's been right around here. And so I can go in and I can look for some of these muscle stocks, because these are, these are the ones that we want to be paying attention to. And they can be extremely volatile, both to the upside and the downside. But we want to be buying into them in markets like now, in uptrends. Okay, AOII is leading, and it's leading because it had a big run here and it's got a big run here, but it still was ranked high. Let me go back. Notice, look at the mouse right over here, that rank as I'm mousing over right here, 98, 98, 99, 97. Okay, because of the power of this move, yes, it's getting obliterated on this downturn, and it did have sell signals all the way down, but the most, yeah, some hold all the way back down again. It started breaking outside of that momentum zone here, and now it's starting to reverse back here, and it's highly ranked. So I could go in and I could look for stocks that are still highly ranked. So you can create a scan that's got, all 98 or higher or something like that. So I've got one here that's 95 buy zone, because I want to see stocks that aren't extreme. That's a gap. I want to see stocks that are in an overall uptrend, but not extreme. Today, that one's pulling back a little bit more. I'd actually watch that one to see if it holds support by the end of the day. Here's a good example of an end of the day idea where it might, as of right now, it might be dipping through this, but at the end of the day, it might have bounced off of this level and finding support right here. So now I've got a possible counter trend ABC pattern and some support right here. It may want to attempt down here. This is a pretty volatile one as well. So these stocks, though, definitely smaller position sizes, because they're very jumpy. But let's go through some of these, and you can see some of those pullbacks. Higher ranked, pull back, get a nice move higher. Let's see if there's some that have additional pullbacks during that last retracement. Even Meta during that last retracement, and you're really rallying off the bottom. PLSE, this one actually I think it had a pretty big run up last year. Yeah, it did. So really volatile, but it's a great way to look for some scans. And again, the new buy list is going to have anything that's in that new buy list, and it's a high ranked stock. But what it won't have is, a stock maybe that is still in a buy zone, but that's retracing and it hasn't gone from hold to a buy. So you can create a scan to be able to go through and look for some of these, or just, look through these top group of stock. They've all gone back to buy. They're only going to pull in, they're only going to show up in this scan if they're buy. So let's do that real quick, actually, and say, let's go in and say, I'm going to create a new scan. I'm going to refresh this. Let's start over. I want stocks that are, let's go $5 or higher. I want market cap that is, let's go 250. Volume, let's keep it at 50. And actually, no, the new buys is set to lower than that. Let's go 3. Let's go here. Let's go buy to hold. And let's go 98. Actually, I don't want buy to hold. I want any signal, but I just want the rank in there. So now let's pull in that scan. So now you're going to get stocks that are hold or sell. There might even be some sells in here. Nothing in that 98, but there are some holds that haven't. They're highly ranked, but they've pulled back. Let's see if some of these are splits or not. No, they're not. So and it's actually moved today. So today you are getting that signal. At the end of the close, it's going to update and show that. But there's an example of, here's a basic material. It's moving higher, and it was in a hold. And maybe one of the things I do here is I add this into my watch list. Here's Carvana CVNA, and it's pulling in. Nice looking pattern here. So highly ranked stock, 99, because it had this big run up, but it's retraced now, and it's retraced inside of this 61850 area, but it has yet to gone up to a buy. So again, what I could do a couple things here. I could decide I'm going for it, right? I'm going to just buy it right here. Maybe I set a stop loss. It's a deep pattern. It's moving higher, or I wait for the signal and I add that into a watch list. I add it here. Let's add it into this watch list and save it and go to my watch list. And now here I can add this alert to say, tell me when this goes from a hold to a buy. So I save that. Okay, now at the end of the night, when you get your nightly email, it's going to have your watch list. And it's, if this stock has gone from a hold to a buy, it's going to show you. If you don't have those, you also want to make sure that you've got your settings here on your account and the settings here. You've got receive emails alerts checked. If that's unchecked, then even if you have your watch list selected, it's not going to send anything out. So now I've got a stock that's highly ranked. It's pending a new signal, and I've got it set up to wait and watch for an alert if that's something that I want to be able to trade. So that's just a quick scan that I could do. And if it's, if you want to be able to see the exact settings, you just go down here at the bottom, $3 rank 98, higher average volume of 50%. So then you can rebuild that scan here. And I'll sometimes do that. In fact, I think I've done it for new buys right here. Yeah, because sometimes it's nice to go back. You can actually look at the date of that new buy. And so you can say, man, I just saw this stock. What day was that? Was it the last couple of days, or, or what did the list look like on Thursday? And I can scan that and change the date. And it's going to show me the new buy that happened on that day, which would have been right here. So here's the 16th, and here's the new buy signal. And then I can see, well, what was the outcome after that happened on that particular stock, and I can kind of get an idea of where things have gone and where they're going. Okay, I'm going to end on that note. Just to summarize again, we're at the upper end of this range. S&P 500, everything's looking really strong right here. Could use a pullback. Might be quiet here for the next few days. We could see a rally to go up and touch that upper range. We're seeing buy-sell ratios across all of the indices now really healthy, almost getting too healthy to where you're now getting 5, 6, 7, 11 to 1. So Dow transports, you've got 11 in the buy range and 1 in the sell. That's why this is 11 to 1. There's going to be some that have yet to move. They're stuck right in the middle right here. So, 2 months ago, a month and a half ago, we were looking at these and they were like 0.03, and they were just really bad to the downside. Now we've moved aggressively to the upside. That's like a freight train. All of these stocks now have moved to this upside. We should get some continued momentum because of that. I appreciate all your time and effort today, and we'll end on that note, and we will see you next time. Thanks a lot. Bye now.